Hello again, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Here again to give you my professional and honest opinion on the 2022 Canadian housing market. So it seems the sellers are in the HODL mode, or the HODL mode, depending on how you say it. I think it's HODL. And the buyers are still waiting on the sidelines. So we have lower sales, but also lower listings, which is an interesting dynamic. But we'll get into that very shortly with the national statistics. One thing I wanted to mention, if you watched one of my recent videos, I think it was about a month ago, when I talk about the buying indicators, one of the indicators was the Canadian unemployment or employment rate. It's at 5.4 now, which is up 0.5%, and that was for August stats. 40,000 jobs were lost, so not devastating, but it is trending upwards. And for the buyers that have watched, that are waiting for the signals, again, we're still a couple years out in my opinion, but that has started to tick up, so we'll keep an eye on that to see if it keeps rising. Okay, now from CREA, national statistics. Canadian home sales post small decline from July to August. National home sales edged down 1% on a month-over-month basis in August. Actual, not seasonally adjusted, monthly activity came in 24.7% below August 2021. The number of newly listed properties dropped 5.4% month over month. So pretty interesting, like I said in the beginning. Sales edged down, as they call it, 1% month over month from August, or from July to August. And listings also dropped. The MLS Home Price Index edged down 1.6% month over month, but was still up 7.1% year over year. And again, watching my latest videos or any recent videos, we're going to see that go into negative territory soon in the next few months, maybe next month, maybe the one after, probably by November for sure. We're going to see negative HPI index numbers. The actual, not seasonally adjusted national average sale price posted a 3.9% year over year decline in August. So again, very dynamic, interesting stats. There's a mix of everything in here. So let's see what they had to say, and I'll kind of give you my thoughts as we go through it. While this was the sixth consecutive month-over-month decline in housing activity, it was the smallest of the six as the national sales slowdown triggered by rising interest rates continued to moderate. So yeah, again, I say this, these are the number of sales they're talking about. 6 consecutive months of the number of sales declining. They can only go so low because people are always going to buy homes in any market. So I expect it to bottom out. I don't think you're going to see much declines from here on in. I think I said that recently too, but I just don't see it going much lower. But again, we'll keep an eye on it, but it's not the only indicator that we look at. It's, number of sales is important. Obviously, we don't have record sales right now, but again, they can only drop so far. It was close to an even split between the number of markets where sales were up and those where sales were down. Gains were led by the Greater Toronto Area and a large regional mix of other Ontario markets. These were offset by declines in Greater Vancouver, Calgary, Edmonton, Winnipeg, and Halifax, Dartmouth. So Ontario had a good month. I said that, I think in my first video of August. It was a good month in August for real estate transactions, considering the last 6 months. Ontario had a good month for the most part, and Vancouver, Calgary, Edmonton, Winnipeg, and Halifax, Dartmouth had lower sales or declining sales. And here's just a graph from CREA just to show you the declining monthly home sales and the 10-year moving average. And you can take a look at that 10-year moving average line. It is starting to trend down. I don't think it's gone down hardly at all since they've recorded it here. But we're going to see it trend down very shortly. We're still well below the 10-year moving average though. August saw national sales hold steady month to month for the first time since February, which, along with the stabilization of demand/supply conditions in many markets, could be an early sign that this year's sharp adjustment in housing markets across Canada may have run its course, said Jill O'Dill, chair of CREA. That said, some buyers may choose to remain on the sidelines until they see clearer signs of borrowing costs and prices also stabilizing. As the market continues to evolve, your best bet is to contact your local realtor for information and guidance about how to navigate this rapidly changing environment, continued Odell. So call your local realtor and see what they have to say. I can probably tell you, and you probably know what most of them are going to say. If you call me, I'll probably say to wait if you're a buyer trying to enter the market. If you're buying and selling, well, you have to do what you have to do. But she did say that it could be an early sign that this year's sharp adjustment in housing markets across Canada may have mostly run its course. So I think she's talking about the sharp adjustment in the market. She doesn't talk about prices. She doesn't talk about sales. Is it which dynamic are we talking about, or which factor? But it's interesting that she thinks that it's mostly run its course. And again, could be, right? So interesting. Let's continue. The number of newly listed homes fell to 5.4% on a month-over-month basis in August. This built on the 5.9% decline noted in July, as some sellers appeared content to stay on the sidelines until more buyers are ready to get back into the market. The decline in new supply was broad-based, with listings decreasing in about 80% of local markets, including every large market except for Montreal, where supply was mostly flat from July to August. So again, we have that dynamic of the sellers holding on or hodling their listings or their properties, hoping for prices to go back up. And I hear this, I've heard it multiple times just in the last week. Oh, we're gonna take it off. Some people talk about renting it, but maybe we'll just try it again in January or February when the market goes back up, like they have a crystal ball. The problem is this January and February, the interest rates are gonna be sky high. It's not gonna be like the last two. So I just don't see it going up. They seem to think that it might, or it's worth waiting. I seem to think the longer the sellers wait, the more they're going to lose on their value of their house. But that time hasn't come yet for them in many of their minds. I think if you're smart, you sell your house now before it's worth even less. And I advise all my clients and anyone that calls me the same thing. There were 3.5 months of inventory on a national basis at the end of August 2022, up slightly from 3.4 months at the end of July. While the number of months of inventory remains well below the long-term average of about 5 months, it is also up quite a bit from the all-time low of 1.7 months set at the beginning of 2022. So again, it comes back to lower sales, but there's also lower inventory, but the months of inventory is up and it's climbing slowly. This was, again, a great month for sales in Ontario and prices, but the months of inventory has still risen nationally. So again, looking at that dynamic, more inventory even when there's lack of inventory. So very interesting dynamic. Breaking it down regionally, most of the monthly declines in recent months have been in markets across Ontario, to a lesser extent in British Columbia. However, in August, it was Ontario markets that contributed most to the overall national decline. So Ontario led the increase in sales, or the uptick in number of sales, but they led the decrease in prices, because this is talking about price declines, not sales, not actual number of sales. Looking across the prairies, prices in Alberta appear to have peaked. Prices are still rising slightly in Saskatchewan, while Manitoba recorded the only decline. In Quebec, prices have dipped somewhat in the last couple of months. On the East Coast, the softening of prices that had been confined to Halifax, Dartmouth is now appearing in New Brunswick and Newfoundland and Labrador. By contrast, prices in PEI continue to edge ahead on a month-over-month basis. That's pretty interesting data right there too. The non-seasonally adjusted aggregate composite MLS HPI was still up by 7.1% on a year-over-year basis in August. Wow, that's a mouthful. This was the first single-digit increase in almost 2 years, as year-over-year comparisons have been winding down at a brisk pace from the near record 30% year-over-year gains logged just 6 months ago. And here's a chart to show that. You can see we're approaching the negative HPI numbers, so probably by November we'll see that negative year-over-year change. The actual, not seasonally adjusted national average home price was $637,673 in August 2022, down 3.9% from the same month last year. So interesting that it's down. Again, they never talk about increases month to month on this, but it actually did increase month over month. And here it is. I do keep track of this. I don't only show you the decreases, but here's an increase. We had a 1.3% month over month increase in the national average home price, and that equates to $8,000. It's still down 21.9% from the February peak, or $179,000, and it's down 3.9% year over year, as they did state. Should you run out and buy a home now because prices are increasing? No, this was a good month, or I guess if you're a seller. Will it get much better? I don't think so. It might edge up a bit, but overall, you got to remember the trend is your friend, as many stock traders say, and you let me know which way you think the trend's going. But I can clearly see which way it's going right now. And just a couple of other updated graphs from Korea. Here is the residential average price with the HPI aggregate composite benchmark. And you can see that little tick up was at $8,000 in the red, and the lagging composite benchmark is trending down. And lastly, the residential market balance. You can see months of inventory did go up that 0.1% to 3.5, and the sales to new listing ratio ticked up just a bit because of the lack of new listings, but it's still at very, very low levels. It'll be interesting to see how the rest of the year plays out, but I'm guessing it's going to be a long and dark winter with the interest rates that keep rising. We do have an announcement this week in the US for their next federal rate hike or decrease, but it's probably going to be a hike, as you well know. And of course, Canada's CPI numbers come out tomorrow, I think it is, or Wednesday. I think it's tomorrow the 20th, which I'm recording this on the 19th. So when this video comes out, we'll already know. Be interesting to see what those are. There's talk that the inflation in Canada will be entrenched, meaning it's sticking around, meaning it's going to be harder to get rid of, and that interest rates will need to remain high. And of course, they're going to go a little bit higher, but they will need to remain high for quite some time, which will ultimately affect home prices and growth in the real estate sector. So as you can see, I'm still away. By the time you see this video, I think I'll be home. But thanks for watching. And until next week, I'll see you then.